we are cautiously optimistic. And as you look at the first half, clearly we're still under some lockdowns geographically. The vaccine is getting out there, though. So as we start to get into the second half, we think that there will be demand recovery, and really as we go into 2022. So it has to do with the vaccine rollout and also the improving economic situation and the demand outlook improving as we go through the year. So let's see how it goes. But again, second half of the year is we're looking at a better outcome.
But I want to go back in time and talk about a time before COVID. I think we all want to go to a time before COVID. But you and I had big conversations about your concerns about investment in the energy sector, the broader energy sector, let alone oil and gas, way before COVID as well. What's going to be different post-COVID about the investment scenario?
Well, I think from an investment scenario perspective, again, it's going to be driven by the demand outlook. And as we look at what happened in 2020, clearly there was a huge decline, and we see that recovery happening in the second half of 21 going into 22. It's going to be different in different locations geographically. As we look at the lower cost basins, you look at the Middle East, that's where you'll see some of the production increases. There will be a role for North America to play, but we think the shale will be more subdued. There's a lot of capital discipline. Obviously, we're undergoing an energy transition as well. So pockets of opportunity in the lower cost basins, and also as you look at Brazil, some of Norway, which are going to be increasing production as we go through the second half.
So I know that shale has been a great source of growth for the American energy story, but I get the impression when looking at Baker Hughes, I've just been on your website actually as well, and I think that it's less of an issue for you now, shale, than it's ever been, certainly in the last few years.
Yes, I mean, we're not as active in the shale plays. As you know, we're not active in pressure pumping. We have more activity internationally. We play a role in the production and the chemical side, and we see that being maintained. I mentioned before, though, the capital discipline that the North America shale producers are having, and we think that will be continued. If you look at historically, North America tends to lead quickly with a volume recovery. We think this will be different, just given the capital discipline and the focus that producers are having on also returns and cash flows and constraining some of the capital inflows.
Yeah, and look, let's talk about it how it is. That capital discipline and that cost cutting that's gone on in the shale industry means there's less money for the services industry around shale. Now, I know they've got their cost of production below $50, below $40 a barrel in some cases, but does that mean it's just not as profitable for the Baker Hughes of this world?
You know, we focus on technology differentiation, and throughout this, we've been introducing new digital capabilities, been looking at ways in which we can become more productive. So again, efficiency is very important as we go forward. So, you know, clearly we've got to have our returns and we've got to have our profitability as well, and we think that we can sustain that as we go forward.